What's going on, guys? So I want to break down and analyze a long trade that I took on Nvidia today. I kind of want to show you guys what I was looking at, where I was looking to take profits at, and how we could, do better, how we could get a better entry, or essentially, what gives us a little bit more confidence for all of you guys out there to take these same exact plays. So someone in the Evolution Discord, brought up Nvidia. So I quickly went over to the charts, and we were currently trading at, and I'm in California, so we were in the 8 a.m. Pacific Standard Time candle. Now, what I was looking at here was an aggressive bounce off of the 50 SMA on a 1 hour time frame. Why this is important, because if I go back to yesterday and I look at the bounce that we had yesterday, it was off the 50. Now we've been trading over the 50 SMA now for a couple of days. So once we pulled back off the open into this channel level, okay, into the 50 SMA and started to get this little bit of reversal, I then started to think that potentially we could have something here, right? So what was I looking at? I was looking at the pre-market high price of around 469.5. I was looking at yesterday's high price sitting at around 465.5. So what I'm looking at here is if pre-market highs is over yesterday's highs, and if we get a push up to test the pre-market highs, all we're looking to do here is wait for this 9 a.m. candle. Now this 9 a.m. candle, if I was to draw a price level line here over our pre-market highs and over our 8 a.m. candles highs, you could see here that around 469.5, 469.75, we have nothing but open skies here on a 1 hour time frame to start testing and challenging this upper Bollinger Band, which was sitting at a price of around 473, excuse me. So you can see here at 473, this is what's called our measured potential. And the reason why it's our measured potential is because this is our next macro area of supply on a 1 hour time frame. Okay, so quickly, what you're trying to do in this particular scenario is you're trying to identify which areas of the chart have the most amount of room with the least amount of risk. What looks good? If we already pulled into the 50 SMA here, broke it, tested the 50 EMA, and had no follow through off the first hour's lows into the lower Bollinger Band here, then why would we try to be going short on a potential reclaim and reversal bounce, right? So if we are able to start getting over some of these supply zones, the 20, the 5, the 10, and we start challenging the pre-market highs, why not throw our money into this candle here at 9 a.m. Pacific Standard Time to potentially try to catch a little bit of this run? Now, let me show you guys the 5-minute time frame on how you guys could have actually had a little bit of a better entry. Again, so my trade didn't start until here. You can see this 469.5. I'm looking at those hour candles highs. I'm taking this here on the 920 break. We pull back into the 5. Not a problem here. We're still trading over the 10. And I ride this into our 5-minute supply zone. That 5-minute supply zone is the linear regression channel. So I'm taking profits into our supply, okay? Just like on the hourly chart. If we're going to play the hourly chart and we're going to take those profits into the Bollinger Band, well, then when we're managing on the 5-minute chart, we want to take profits into the linear regression channel here. So always, anytime you take plays, you're taking profits from supply to supply, and if you're shorting, from demand to demand. So just kind of keep that in mind. So when we are identifying which trades we should take, we need trades that have potential for us to run. So in this particular case here, over 469.5, over 470, we have $3 of room. And as you guys know, for myself, I'm comfortable taking $1, $1.50, $2 off of these trades, like on stocks, on Nvidia, Tesla, so forth and so forth. That's enough for me. So this is enough room for me to take the trade. However, okay, we had 2 more entries that we could have taken, and I want to show you guys those on a 5-minute time frame here. So if we look at the 200 moving average and we look at this 100 simple moving average here, you can see that off this bottom, off this pullback here, we pulled into the linear regression channel on a 5-minute time frame, and we kind of pitter pattered back and forth, back and forth, back and forth, never really confirming the first hour's lows, kind of just hugging this bottom floor. Once we started to push up here, you get your first setup, close over, okay, the 20 SMA. We also closed over the 20 SMA here. You could have used your reason why candle, which is this candle here at 8:10 Pacific Standard Time. You could have used the low as a stop, got into this trade, sat through a little bit of a pullback, and then rode it from the bottom. You would have been getting into this trade at 8:15 in the morning. That price was around 460. So you can just see that was a hell of a move there for 13 points. You could have taken this long position here as well. Now, the reason why we're not going to take this short position is because we never take out the low of day. The rules are simple. We cannot be looking to take short positions when we're still above the low of day. So we have to ignore this setup, because if we're going to take this setup here, you would immediately have gotten snapped out. Now, someone may ask the question, well, how do you know that this wasn't going to come down? That's the thing. I do not know. But what I do know is that this is not even taking out any of this consolidation lows. It's not only taking out any of the consolidation lows, it's not taking out the low of day. So why would I want to enter and risk my money on this potential trade when we're sitting at a level of support and haven't even broken through any of the lows of day? So what I would be looking for here is more so a nice flush. Now we're building a little bit of a floor. Let's look for the potential bounce off the bottom floor. Okay, so that's what I would be looking for. So you can see you get your first setup here at 8:35. You get your confirmation here at 8:40. Now here's also a second trade. If you don't want to sit through all of the supply zones because you're a little bit worried that maybe potentially we bounce around, then why not wait until we clean up this supply and look at the 8:40 Pacific Standard Time candle, clean up the supply with a nice green engulfing candle that takes out all of this price action going all the way back to the open. If we look at that candle there, our high price is 466. We get our confirmation at 8:45 in the morning Pacific Standard Time. You would essentially be entering in here at a price of around 466 to 467 and essentially been able to power trend ride this over the 5 and 10-day moving average all the way into your macro 5-minute supply zone at 473. 473 was always the potential. That was always the expectation. Again, as long as we're not taking out your candles low or closing back below the 20, you would have to let the chart play out and ride this. This was a hell of a move, a beautiful move. I want you guys to see it, learn it, live it, trade it. What does that mean? Identify the down move. Identify we're on a floor. Identify that there's more value in the bounce over the 20 SMA, right? Over the 20 SMA, over these levels of 5-minute supply, or over the previous hour's high. Potential always next macro area of supply on whatever time frame you're playing. In this particular case, I love to use the 5. I love to monitor it on the 1 hour, and I love to use the daily as a reference. Hope this makes sense. If you guys want to trade with me and you want to trade with the rest of the gang in Evolution Traders, you want to start learning the system and learning the process, trading with me one-on-one, definitely join evolutiontraders.com. I will see you guys on the inside.